Joined by Benjamin Collett, the head of Japanese equities at Lewis Capital Markets, Hong Kong. Thank you so much for joining us. Now, I think my first question would be, yesterday the Bank of Japan stepped in to provide some extra liquidity. This seems not to be enough, but when you're faced with what we're facing at the moment in Japan, is there anything that the Bank of Japan could do to soothe the markets?
Well, I mean, in terms of the liquidity injection that BOJ provided, I think, they ramped it up, I think, 3 times to a total of estimated 17 trillion. This is on Monday, and they've been supplying liquidity in free market operations today. That in itself isn't going to support the equity markets directly, although it will provide liquidity support for the corporations behind that. And I think they're really just worrying that they were addressing certain liquidity issues. But as far as the equity markets go, we also have an extension of the BOJ asset repurchase program, which has yet actually there's nothing that's going to support the market in free fall, falling down to 16%. But the operations they're undertaking.
Not even if they have some if they put some bolder moves, if there's some kind of direct intervention, for example, on yen, would that have any effect, or it's just a free fall at the moment?
Well, I mean, actually, the very interesting thing about the yen is that a lot of the move that we saw post the quake on Friday was, I think, as a result of an expectation that corporate Japan was going to repatriate funds. This was what happened post the Kobe earthquake. But the situation in terms of balance sheet in Japan is they're much healthier. Corporations have much more cash. So that trade is definitely going to be more muted. Now, at 81 yen, I think the BOJ won't intervene at a specific level. The BOJ's mandate to intervene in the currency is based on aggressive moves, and certainly they are going to be there. There's massive BOJ and government resolve to provide stability to the financial markets, whatever that may be. And certainly at the right level, or an aggressive and exaggerated move in a short period of time, the BOJ will provide support for the currency. And I think you'd be a brave man to be buying yen if it approaches sort of the 77, 76 mark. Certainly I'll be.
And in terms of equities, Benjamin, should investors just hold off until we understand better the nuclear situation, what's going on, and how the government is reacting to it?
Well, I think it really depends on your trading strategy. What we've seen today is a lack of risk appetite for the market, and when the market moves in double digits, especially a market the size of Japan, you have the trading that's occurring is traders that have to trade rather than want to trade. The long-term outlook for Japan in terms of 5 years, I think if you're buying in 5-year term, then here's as good a level as any. If you're looking at 6 months, the next 6 months in terms of earnings for corporate Japan are going to be impacted negatively. GDP also is going to see a bigger hit than we thought, and that is related to this nuclear issue. Currently, about 20% of the nuclear production facilities in Japan are shut down. That's responsible for 30% of the national power. So I don't think it's as big as original estimates are, but they have an energy deficiency over the next 6 months. That's on top of any factory reconstruction. So earnings in the next 6 months, 6 months is the minimum amount of time it's going to be before it turns to normal.
Yeah, and of course there's still so much fear on the streets. Thank you, Benjamin Collett there.
Yes.